You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPKEX volatility products. SPKEX options and futures are traded on the SPKEX Volatility Index, SPKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPKEX at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Of course, the final program for our broadcast week, at least for those of you on the on-demand side. If you want to keep the party going, you want to talk unusual options activity, you want to get a couple of extra exclusive shows, you want to get access to our pro podcast feed, you want to get your name in the hat for our awesome giveaways, the Options Insider Pro Trading Crate, as well as, of course, live access to this and everything else we do here on the network. Where do you get all that stuff? Theoptionsinsider.com/pro is the way to extend your journey. Join us here on the dark side. It's a pretty fun place to be. Red lightsabers for all here on the /secret club fun. And joining me to discuss all the fun in the world of volatility this week, the greasiest of meatballs himself, Mr. Mark Sebastian from OptionPit.com, joining us from the Southern Volatility Mecca of Austin once again. Mr. Meatball, welcome back to the show. How go things in the Southern Volatility Mecca, sir?
Things are good. It's good to be here. I'm super happy to be here. It's a great, interesting trading day. And just we're gonna go from there.
Let's keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let us get to it. It is time for the Volatility Review, the portion of the show we break down the week that was, and indeed still is, from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And there's some fun to be had out there in the market today. I guess it really depends on your perspective. If you're a hardcore bear or maybe a light to moderate vol bull, then we got a market for you out there today. A lot of red on the screen and the major indices, listeners. S&P closing in on off 2.75%. The Dow off about 2%, and the NASDAQ off about 3.7%. So NASDAQ leading the charge to the dark side, as it is wont to do. S&P off over 100 handles now, listeners. So they are coming for it today. What is spooking this market, listeners? Well, it's that time of the month, listeners. It's non-farms time again, a time everyone seems to be glued to. It used to be back in the day, it was everyone was glued to the Fed briefcase announcement imminent. That was a big deal. These days, it's all about the non-farms, because that really drives what the Fed is up to these days, right? Coming in at 263,000 versus the 255,000 expected. So slightly higher. That's never good. And, of course, unemployment, all the other fun stuff going on there, 3.5% versus 3.7% expected. And now you might think, well, maybe that's not bad. But, of course, the numbers they're aiming for, the range they're looking for, the pre-pandemic levels that would signal maybe things are returning to some semblance of normalcy would be usually in the $150,000 to 200,000 range. So being well north of that yet again means economy still cranking along. That means more Fed rate hikes to come. And of course, after earlier in this week where it seemed like everyone just couldn't stop buying this market, just scooping it up with both hands, 2+% up days, couple of days in a row, then some surges that were mitigated later on in the session today. We are fully back in retreat mode. S&P well back below 3,700, 3,640 odd coming into the start of the show. It means our vol friends getting, and that's why I put a modest vol spike earlier, getting a bit of a lift. Maybe you might look at this screen and think, oh my God, vol is just going to be exploding today. And not quite. Spikes at about a 31.45 when we kicked off the show. So back in the 30 handle, only up about 1.2 points from where it was this time last week. Remember, we were in a pretty elevated vol range last week as well. VIX cash, when we kicked off the show, a little bit shy of 32, 31.90, up about 1.8 points from where it was this time last week. So again, not exploding to the upside, but you can also argue we've kind of seen this movie before. Maybe not 100 points in a little while, but still, we've seen aggressive sell-offs recently, and we've seen aggressive intraday swings as well. So not our first rodeo at this point. VVIX 102, so back above that triple-digit level, but also still down from where it was this time last week. Actually down 2 points from where it was this time last week. And our old friend, the Viking, a.k.a. VSPKEX, also down precipitously, down 21 points. It's 117 right now. Again, if you're still developing your frame of reference for VSPKEX, the high is about 206. That was December of last year. And the low was about 89.5. That was July of this year. So we're towards the lower end of that range right now. But again, things could start popping off again. So Mr. Meatball, we were talking before the show, and you were mentioning kind of how surprised you were at how muted VIX's response has been to this market. Walk us through this crazy week. Obviously, we had a couple of big aggressive upside days to start the week. Seemed like we were off to the races. And then wham, bam, thank you, ma'am. Here come non-farms to just wipe it all out, sir.
Yeah, it's kind of crazy. Yesterday we were down 38 points. Ahead of non-farms, they rallied VIX 1.97 points. And today we're down 100 and we're up 1.12. And in fact, if you look at strike volatility, so let's pull up let's pull up Halloween options. October, now we'll do, let's pull up November 4th. That's a month away. That's in the VIX calculation right now. And if you look at the 25 delta puts, so we're talking we'll call it 3,500s. Those are 30 deltas. And the strike volatility is actually down. So yesterday, the 3,500 puts had an option vol of about 31.68. It's 30.77 right now. So what we're seeing is the market getting smoked, and option traders that were long puts are selling them to the market makers right now. And that is, I think, what is kind of driving us in this trade right now.
That gets back to what we were saying earlier. Many of our guests have said as well, if you hedge in this environment, it's not that easy. It's just buy a put and make money. You got to really be judicious with where you put it on, what levels you're paying for it, and also how you take it off. You could have a market like this, and you could be, let's just put it, demonstrably underwhelmed by the performance of your puts out there. Another reason why we say, be really cautious if you're going out there and just loading up on your SPX or your SPY puts, 5%, whatever percent out of the money puts you're looking at. Because A, they're expensive, and B, they don't always maybe deliver the bang for the buck that you might expect, given everything else that's going on out there. So yeah, definitely words of caution if you're looking for ways to hedge. Just again, that's why so many people spend so much time on this network and in the options world in general, exploring and looking for ways to pay for that protection and to spread it off so that in environments like this, you're not getting completely overwhelmed by your puts dramatically underperforming out there. Let's get on out to the world of all things futures. We just had the MIAX folks on talking about those futures continuing to grow. Of course, I've often referred to the ecosystem as a three-legged stool. You got the futures, you got the options, and now we have the ETFs with the options on them on top of that, an added bonus out there. So now we are starting to see that ecosystem start to really grow and generate some volume. So Spike's numbers looking good. We'll get some MIAX folks on next week in terms of futures volume to give us an update on how things are looking. Of course, we have the numbers for September now from OCC. We'll get to all that fun in a little bit. First, let's get into the land of the vol surface out there and kind of getting back to what we were talking about earlier in the show, this muted vol response. We are still looking at things looking juicy, a little bit backward there in that front portion of the curve. But again, nothing tremendous. Obviously, if we rack these now, might be a little bit higher. But when we ran them right at the start of the show, listeners, we had that OCC future up close to a half a point, about 0.45, and the no future up about exactly half a point. So that's all the fluff, all the backward juice we're really getting in that front portion of that curve. You go a little bit farther out, there's still a decent premium to where we are out in early next year. Remember, for a while there, they were pricing even more juice beyond that into Q1 and Q2 of next year. We are seeing April future was at about a 30-40 when we kicked off the show. So a little bit below where the OCC future is trading right now. So again, leading into that backwardation, the June future actually below a 30, 29.80. So interesting. Maybe whatever dramatic event they were pricing in to that longer term portion of the curve, I guess it happens before June. Intriguing stuff out there. Mr. Meatball, what's catching your eye out there in a very interesting, ever-evolving VIX futures term structure, sir?
Yeah, it was all over the place this week between kind of flattish and backwardation. And now when you look at where we are, we're right back in backwardation. You still have that little kink in December. But other than that, we're in backwardation, but the VIX is a little muted. It is a little muted. And so the spread between October and the October future and the VIX itself is pretty tight, especially given that we've got, a couple of weeks left in the contract. So they're still not fully buying into this sell-off, the vol people.
You know what else they're not buying into? Our VIX futures. We have the numbers here from OCC for September. Listen, remember, OCC, pretty much the only futures they clear are VIX futures. Used to have the Bitcoin futures at SIBO. We all know how that went. So we're looking pretty much at VIX futures numbers now. And they cleared almost 5.5 million VIX futures in September of 2021. And September of this year, 4.98 million. So down about 9% over the course of this past month, which is interesting, especially when you look at the rest of the numbers coming out of OCC, which was a banger month, listeners. Total options volume changing hands over there at OCC, 915.2 million contracts. That's up 12% from September of 2021. And we know September of 2021 was no slouch when it came to volume. It is also the third highest month in the history of the options business. Again, if that may sound familiar, it's because August was just the third highest. September came in and eked it out by 0.3%. Said, sorry, kid, move to the back of the line, move to number 4 in this spot, because September taking the number 3 spot. Year-to-date ADV also up about 5.1% to 40.8 million contracts. So that's looking good. That means the question that's been dogging us all year is, can we come close to matching last year's record options volume? Seems like the answer right now at least, is a resounding yes. So September options volume up strong, Mark, closing in, threatening a 1 billion contract month. Haven't quite gotten there yet, but 915, nothing to sneeze at out there. ADV up 5.1%. So does it surprise you like it surprised me that the futures taking a big break, down nearly 10% in volume last month, sir?
That actually did surprise me a little bit. You would have thought that with all the action, the VIX futures would have been all over the place and active, but I guess that kind of lends the fact that VIX really hasn't worked very well for a hedge. And that is potentially what is really driving us to not see a lot of VIX volume. And the volume that we do have, as we said, is spaced all over the place in weird spots like the back month.
Yeah, we'll get some of that weird volume in a little bit. Other highlights, if you're wondering, maybe people didn't come to play in indexes really at all, or index vol last month. Well, no, the answer to that is they did resoundingly. ETF options and index options both up strong. ETF options up 61.4%, index options up 54.1% from September of 2021. So pretty much every other category was up except for the VIX futures, which is kind of weird. Even the index and ETF options, because earlier in the pandemic, the VIX futures were kind of languishing, but ETF options and index options were also languishing. So they all kind of went together as one complex, effectively. These days, those other two parts are doing robust numbers, and yet VIX futures, for whatever reason, not exactly blown. Maybe everyone's got their crazy upside on now, and they're good. They don't need to play in the futures. I don't know what's going on out there, but intriguing stuff. So a record month across the board for pretty much everything out there, listeners, except for VIX futures, which is kind of interesting. You know what else is interesting still, listeners, is this kind of funky spikes options top positions. I've had pretty much everyone from MyAx, all of our guests, try to weigh in on it. So we've all weighed in on it ourselves. It's just interesting, I think, to put it mildly out there. We'll do a quick top 10 here in the spikes options once again. It's like some of these funky puts. I know there's some of them are still there. They just moved up the link here. Number 10 here, we've got the D's 10 call. So that's what's really interesting about this. It's both sides of the coin. It's super deep puts and it's super deep calls at the same time. Like, who does this? But apparently folks in spikes do this. The D's 10 calls. Number 9, we've got the OC 140 put. So there you go right there, listeners. Both sides of the coin coming at you. Number 8, the OC 32 half puts. I don't know why that's even on this list. That is far too normal to be on this list. Number 7, we've got the OC 24 calls. Number 6, here we go, the OC 13 halves. Because you see that going up in VIX all the time, right? Don't you see 10s and 12s and 13 halves going up in VIX every day? Like clockwork. But number 5, we got the OC 70 puts. So again, if that was VIX, you'd see the OC 70 calls. But no, OC 70 puts and spikes. Number 4, we got the OC 170 puts. Here we go. Number 3, the NOV 160 puts. Number 2, the OC 11s. Back to the 11 calls. And the number 1 position still in spikes options right now, the NOV 12 calls. It just brings a smile to my face when I run through that every week, listeners. We've pontificated about that ad nauseum here, in terms of why folks would choose to operate that way. It is interesting. I'm curious your theories as to why these are going up, but they persist. They continue to go up on both sides of the coin, deep in the money calls and deep in the money puts over there in spikes options. You folks been slinging any spikes options now that the futures are online and the ETFs are there with the options to drive more volume to the futures, so then in turn tighten up the options markets? I'm curious what you folks have been seeing out there. If you've been slinging any spikes. I'm looking at our chat here. Our chat's just too busy debating whether hipsters actually eat Mickey D's or not. The answer to that is normally no, unless there's an uber hipster designer Happy Meal with a funky 4-eyed grimace in it. Then, of course, come out of the woodwork for that bad boy. Let's see what's coming out of the woodwork here in VIX options today. And, this kind of goes back to what we were talking about at the start of the show, this somewhat muted, kind of shrug of the shoulders response of VIX to this pretty aggressive sell-off in the market here today. If this came out of the blue, listeners, if this came out of nowhere, if we were just gently drifting up for the last couple of weeks and all of a sudden, bam, off 100 points in the S&P right now, of course, we'd see VIX over 1 million contracts and things would be exploding. It'd be dogs and cats living together, mass hysteria. Instead, what we see after months of this kind of whipsawing and some aggressive sell-offs is barely north of 250,000 contracts on the tape right now. 266,000 contracts on the tape right now. The ADV is getting juicier, is getting frothier. 563,000 contracts on the tape right now, up 35,000 contracts from this time last week. If you've been listening to the show for the last month, you know, just a few weeks ago, that was below 400K. It was in the 390 range. So it has seen a remarkable resurgence in VIX options volume, just not so much today. Let's break down the top 10 positions. Let's do a compare and contrast. Let's see what's going on in VIX options versus Spikes land. Again, kind of a tale of two cities out here. Number 10, we've got 180,000. That's what it costs you to break into the top 10 in VIX options. That's actually pretty steep. Usually it's around $150. So we're seeing a decent amount of OI in VIX options right now, which is around 10 million contracts right now. So that's a pretty hefty number. That gets you all the way to the NOV 80s, the NOV 80 calls. Number 9, 193,000 of the October 20 puts. By the way, there's only 2 puts in the top 10 again. So 8-2 calls over puts. And those are really the only 2 normal quote unquote strikes in our top 10 as well, the 2 put strikes. Number 8, 196,000 of the OC 50s. Number 7, 202,000 of the March 75s. Number 6, 208,000 of the OC 75s. Number 5, 215,000 of the October 25 puts. So our second of 2 puts in the top 10 listeners. Number 4, 222,000 of the OC 60s. Number 3, 222,000 as well of the NOV 70s. Number 2, 251,000 of the NOV 60s. And the number 1 size position in VIX options right now, 270,000 of the NOV 50 calls. So a lot to unpack there. Notice you don't see 150 puts or anything like that, or the 10 calls here. So interesting, the use cases people get up to out there. I'm going to break down the top trades in a second, Mr. Meatball, from this week. But first off, what really resonated to you in terms of the action you saw in VIX options this week, sir?
They were busy. And we didn't see any giant trades like we did last week, but we continue to see November call buyers. That tends to be where all the activity has been in VIX for the last, few weeks. Today, I'm looking nothing huge. Biggest trade is actually the OC 28 puts, and we've got some NOV 45 calls. So nothing really huge today. 16,000 NOV 20 of the OC 28 puts. Yesterday, we did see a call roller. A trader sold the NOV 65 calls, buying the Feb 65 calls. We also saw a March 35 150 call spread go up, it looks like. They or maybe just a March 150 call buyer on those, kind of weird. And
that one left off the page to me as well.
Yeah, 10,000 of the 150s for 19 cents. I don't know. But it might have been a spread against the 35 calls that went up earlier in the day. That would make sense. They had 10,000 each. That would make some more sense to me. That was the way they did it. But there were a lot of those March calls that went up. It could have been a ratio mark, honestly. But looks like that was weird. Wednesday, not a busy day. We had a put seller of the NOV 22 puts and a March 35 call buyer. Perfectly reasonable. Nothing weird there. And Tuesday, we continue to see call buyers, the NOV 35-50 call spread going up. We did see some put action in October, where it looks like a trader did kind of looks like they sold the 27s, sold the 26, and sold the 24 puts, or did a 26-24 put spread. Just interesting, but nothing really crazy. And then really not a lot of real interesting volume on Monday either. Just a roller out of OC into December. So all in all, it wasn't a slow week, but nothing really pops except those March 150 calls.
It was kind of left off the page to me when I was looking at the numbers today. I was like, "Oh, that's have we gotten to that point in the dance? Is that where we are now with the 150s? That's the new pars, I guess, out there? I don't know. Interesting stuff. Let's get into it, listeners. Mark kind of broke some of it down for us today. Like we said, not a heck of a lot on the tape. 266,000 contracts on the tape. The big dog today, 27,000 of the October 28 puts, followed by 18,000 back to the doubles, the Oct double calls. Number 3, 15,000 of the March 40s. So get a little bit of March sneaking in there. Number 4, 14,000 of the Oct 47 halves. And rounding out the top 5 on a pretty lackluster day, all things considered, 10,000 of the Oct 60s, 6 O's. Listen, you think even threatening a 60 handle by October expiration? That would be interesting. Probably not for the world if we got to that level that quickly. That means something probably pretty horrible is happening. So let's all hope we don't get there collectively as a society, listeners. Of course, we all know you don't have to get to 60 to make the 60s work, but still intriguing nonetheless. Thursday, a little bit more paper on the tape, 598,000 contracts on the tape. The big dog, and Mark, while you were talking, I dug into these. The big dog yesterday was the March 150. Yes, 150, listeners. They traded 50,000 times yesterday, pretty much all of that in one print. They went up in one print of 48,000 for 19 cents. Now, while you were talking, Mark, I was digging to see if I could find another leg to this, and I do not see it. They went up marked late, so that could be throwing things off a little bit. But I see a lot of other spreads going up. Nove spreads, Feb, Nove 65, roll to Feb, all that kind of stuff for decent size. But looks like the 150s, Mark, they just went up straight up for 19 cents. Is that pretty much what you saw as well?
Yeah, I mean, so earlier in the day, they bought they bought some 35 calls for 356. So I had thought maybe they were kind of racing those out, but they might have just been straight buying them. You made some money on those. They're 23 cents now. You know what you can do, trader that bought those? You can sell the 180s at 15 cents against those and have on a really cheap, have a 4-cent 30-point vertical.
Done all day. Twice on Sunday. Why not? Yeah, I see the 10,000 lot of the 35s you're talking about. They went up 4 hours earlier. So unless this trade was super late. And that would be an interesting spread as well. The 35, 150, 1x5. But again, we have seen much crazier things going up these days. You like those, listeners? March 150s. We've talked before about the pars and the 110s and the 75s and the 80s and all these kind of ridiculous strikes. Now we're kind of taking it to an extreme with the 150s. Obviously, the same analysis that goes into the 60s goes into these. You don't have to get to 150 to make these things sing. In fact, we've talked about it on the advisor's option and others with Matt, who's been a guest on this show many times. He's also talked about it here as well, about these kind of garbage calls and how they can perform decently in certain scenarios. But you have to be very quick on the trigger finger to dump them when you see those little pops, because they don't last very long. But intriguing stuff. Is that what someone's up to? They're just taking a flyer here. 19 cents, listeners. So it's not nothing that they paid for these things. 50,000 times. That's a pretty sizable chunk of change out there. Number 2, we have 42,000 of the Nove 60s. Number 3, yesterday, 40,000 of the Nove 65s. And number 4, 38,000 of the Feb 65s. I mentioned there was a bit of a Nove Feb roll going on there yesterday. And number 5 yesterday, the Nove 45s. Wednesday, a little bit north of 250,000 contracts on the tape. 525,000 to be precise. The big dog on Wednesday, and maybe this is related. The day before, we saw 35,000 of the March 140s going up. So someone, it appears, has been nibbling at all this March upside for quite some time. Let's see if we can pull those up really quickly, listeners, and see exactly what they were up to with those March. Yeah, same thing. I don't see us. Well, no, you know what? There on that one, it could be. If the 35s went up like 10 minutes before, so that could be a bit of this. And they weren't the same number. Again, it was 16,800 of 35s versus 19,800 of the 140s. But I could maybe see more of an argument for those being part of a spread. I'm just looking here. And there was a spread of the Nov pars to the March 140s that went up later that day 8,000 times. So I guess we've reached that point in the cycle, Mark, where it's time to roll your Nov pars to the March 140s. What do you think of that one, sir?
That is, it's a hedge against a credit portfolio. So, it is what it is.
You see up and outs. They don't usually see up and out 40 handles, but hey, crazier things have happened again. We're in that kind of time frame, listeners. Crazy stuff popping off in VIX options. So yesterday, 35,000 of the March 140s. We just broke those down. Went up in a couple of trades, actually, it seems like. And then number 2, the OCK 50s. Those seem comparatively reasonable now. Nearly 100 handles below. 24,000 of those. Number 3, 20,000 of the March 35s. Number 4, 19,000 of the Nov 30s. And rounding out the top 5 yesterday, 18,000 of the D's 30s. Tuesday, 575,000 contracts on the tape. The big dog, 43,000 of the OCK 27 puts. That seems far too normal, far too reasonable for this list. Number 2, 39,000 of the Nov 35 calls. Number 3, 31,000 of the Nov 50s. Number 4, 28,000 of the OCK 40s. And rounding out the top 5 on Tuesday, 29,000 of the OCK 26 puts. Monday was the lightest day of the week, at least so far. We'll see what today holds, but if today stays on its trajectory, we might beat it in terms of light volume. 446,000 contracts on the tape. 37,000 was the big dog on Monday. That was the OCK 40s. Number 2, 26,000 of the D's 45s. Number 3, 22,000 of the October 60s. Number 4, 21,000 of the D's 65 calls. And rounding out the top 5 on a pretty light Monday, 20,000 of the October 35 calls. So a weird week, a somewhat light week with some extreme highlights that are worthy of note. March 140s, March 150s, listeners. What are your thoughts on all that goodness? We're really moving into the extreme zone of the VIX options curve here. And we've been doing this show for a long time. I can probably count on one hand the number of times I've seen prints going up in strikes anywhere even close to those levels. So yeah, we're in some very rarefied air right now, listeners. Speaking of rarefied, our newest additions to the vol space. They're not quite in that rarefied air yet, but they're trying. Good old Spikes. I guess they want to call it Spikes. Spikes ETF, SPKX, was at a 31.90 when we kicked off the show, up about 1 point. Actually, pretty much exactly 1 point. Let's see where it's hanging out right now. If I put in the right ticker, that would probably help. There we go. 31.80, so it's actually giving up a tenth of a point out there. In terms of paper, we're seeing it's the OCK 47 calls that are the big position out there. Remember, they have options now. The options have been live for about a week and change out there. So we're starting to see some prints. Number 1, the OCK 47 calls. Number 2, the October 27 puts. I do believe that's where the meatball's hanging out. So he is one of those contracts on the OCK 27 puts. Number 3, we've got the OCK 29 puts, and it kind of falls off from there. So we are seeing some options out there. Then we got our old friend Spiky, a.k.a. SPKY. That was at a 35.40. That's up 1.5 points. Remember, that's our 1.5 times levered ETF out there. Let's see what we've got going on in terms of options paper out there. It looks like getting a little bit more juice on this one. So this is kind of like what we're seeing with UVIX and SVIX. The levered product is getting a little bit more attention. And now, obviously, SPKX is not inverse. That also is what SVIX has going against it. But looks like Spiky getting a little bit more love out there. We've got the OCK 52s are the big dog out there, followed by the OCK 51s. So maybe a tight vertical. We've seen weirder things. And then the OCK 45s and the OCK 44s for the top positions out there in terms of options. Mr. Meatball, first off, give us an update, a much anticipated update on your one lot in good old SPKX. And then what are your thoughts on what you're seeing out there in good old SPKX and Spiky?
Yeah, my SPKX puts are down $80. I'm losing on these. I need Spiky to pull back, and or Spandex to maybe we'll call it Spandex. But I need the SPKX to reverse here.
You need a size turnaround, then, baby. The riches, the private island will be yours, sir, for the taking with that one lot of good old SPKX. Have you guys slung Spiky or SPKX yet, listeners? And we do need a name for SPKX. Hit us up with some suggestions because it just Spiky, it rolls off the tongue. I guess we can go Sparks and Sparky, but kind of getting away from the Spikes branding at that point. But we could do it. We could do it if pressed, listeners. Let's see what SVIX is up to right now, our inverse friend. It's hanging out at 1035, down about a third of a point, and that's pretty much where it was at the start of the show as well. Obviously, that's the inverse product, so not loving this environment right now, but also we're not seeing a huge move to the upside, so not exactly getting annihilated either. In terms of paper, got a whopping 521 contracts on the tape out there right now. The ADV and uber scintillating 886. If you want to know what the top positions are out there right now, we'll just do a top 5. The number one position has some size. It's the D's 12 calls. It's interesting. 16,000 of those. They make more sense maybe in SVIX than they do in in Spikes options. But hey, c'est la vie. To each their own out there. Followed by number 2, 1,005 of the March 25 calls. Then it falls off a bit, 781 for number 3 of the D's 5 puts. Number 4, 744 of the March 8 puts. And rounding out the top 5 out there in SVIX, 525 of the October 9 puts. Let's go out to its compatriot out there as well. Good old UVIX, a.k.a. the levered product, a.k.a. the one that's kind of putting up all the numbers. It was at 1365 when we kicked off the show, up about almost 3/4 of a point, and it's still pretty much hanging out right there right now. In terms of paper, having a pretty robust day, 8,000 contracts on the tape. Right now, the ADV is only 63.91. It's actually down 300 contracts. It's interesting. Every time we profile this on a Friday, we see spikes in volume, pun intended. So it seems like the weekly expirations really do drive some paper in UVIX. The rest of the week, it kind of languishes. But whenever we talk about it on the show, it's putting up numbers. So it's an interesting little dichotomy out there. So 8,000 contracts on the tape out there today. Let's break down the quick top positions, and we'll see what's trading out there today. Top positions out here in UVIX. Number 1, we've got 2012. So 2012 of the D's 18 puts. A fine film starring John Cusack. And I put fine in air quotes there, listeners, about the Aztec or the Mayan calendar. I forgot which one. Harbinger of doom for us in the year 2012 out there. Excellent film. Number 2, 1,600 of the OC 12 calls. Number 3, 1,470 of the OC 11 puts. Number 4, 1,280 of the OC 12 calls. And number 5, 1,100 of the D's 30s out there in UVIX. In terms of what's going up out there today, no real big prints. It seems like it's just a decent number of hefty prints that are adding up to this 8,000, including the big dog today, 675 of the October 10.5 puts. These are just the regular monthlies. And then number 2, 531 of the OC 11 calls. Number 4, 500 as well of the OC 12 calls. And they kind of go on from there. So intriguing stuff. Mr. Meatball, first off, what are your enduring memories of the amazing John Cusack film known as 2012? And then B, what are your thoughts on the paper we're seeing, or perhaps lack thereof, out there in SVIX and UVIX, sir?
Yeah, UVIX blows up on Fridays for some reason, but SVIX, when we get a lower VIX, I think that will get some traction. But right now, not a ton of traction to it across the board. UVIX, a little different. The stock itself, very busy. UVIX, the average daily volume on the stock is up to, I will tell you in one moment. The average daily volume on the stock is up to about 6 million shares a day. In fact, but today it's already done 5.3 million. So it is a busy day. And then today's option volume is 7,700 already. The average volume is it's getting up. It's up to about 6,000. So it's not, it obviously isn't UVXY yet, but it's coming along.
Yeah, and intriguing stuff going up out there in good old UVIX. Let's see if we can say the same for UVXY. Mark's been kind of sounding the death knell for this one for a while. He thinks UVIX is coming for its crown. Let's see what's going on out there today. 1270 is where UVXY is hanging out right now, up a little over half a buck from where it was this time last week. In terms of paper, starting to see a little bit of a resurgence of the ADV out there. 240,000 contracts on the tape right now. The ADV is around 290. It's down about 18,000 from this time last week, but it looks like we're going to probably hit that today. So maybe we'll see that number start to turn around. So we haven't really seen the end of UVXY yet out there. In terms of top positions, let's see what's lighting up out there in UVXY. Number one spot in UVXY, 27,000 of the October expiring today, 13 calls, followed by number two, 23,000 of the OCT10F puts, also expiring today. Number three, 21,000 of the 13 puts, also going out today. A lot of near-dated paper. Like we said, weekly expiration, kind of a hot day for all these vol ETPs. Number four, 17,500 of the Jan 75. So now we're getting back at it again, listeners. Some of the funky upside that tends to pop up in UVXY every now and then too. And number five, 12,000 of the 11 puts going out today as well. In terms of action, what's going up today? What's trading today? Again, it's all stuff expiring today. We got 20,000 of the 12 half calls, which is pretty much right where we're hanging out right now. So no surprise there. Number two, about 18,000 of the 13 puts. Number three, 15,000 of the 13 calls. Number four, 13,000 of the 12 puts, and rounding out the top five today, listeners, we've got the 12 calls with 11,000 contracts. Mr. Meatball, I know you've been watching UVXY for a while, kind of wondering if perhaps the bell will toll for it as UVIX continues to grow. Doesn't seem like it's happening right now, sir. So what's catching your eye out there in UVXY, sir?
In UVXY, it still continues to trade. It's very busy. Up about, call it 5% right now. Off the highs, still doing some decent volume. The total volume today, though, is only 38 million. And the average volume's down to about 67 million. So it has definitely seen kind of a little decrease. Even the option volume is not crazy today. On an expiration Friday, it's sitting at about 240,000, which is going to end up being above average, but nothing crazy.
No, it is crazy, listeners. The fact that Mark has talked me into bringing VXX back onto the show. So if you were out there celebrating, if you thought, hey, we're done with VXX, just when you thought you were out, they pull you back in because lo and behold, they decide to actually start maintaining it again. And lo and behold, it's actually kind of starting to make sense again. So VXX, when we kicked off the show, was at about a 2090, a little bit south of 21, up about 0.4 of a point. As of right now, it's at about 20 3/4. So giving some of that back right now. Seeing pretty decent paper, actually, especially given the fact that the ADV has kind of fallen off a cliff for obvious reasons. The ADV is 50,000 contracts. You might be surprised that it's even that high, given how terrible this thing has been performing for the last few months. There was a time, listeners, this thing could rival VIX options and some days even eclipse them. And so we're a far cry from that, listeners. But still, today, doing 46,000 contracts again. So going to hit that ADV probably. So going to see that ADV probably start trending north again. What are your thoughts on VXX, listeners? Have you guys started dipping your toes back in these waters, or once bitten, twice shy at this point, or maybe many times bitten with VXX at this point? You've just washed your hands of this product and are moving on. In terms of top positions, we haven't done this in a while. Let's see what's going on out there in VXX. The top spot, because the OI is so light, listeners, the top spot still belongs to the Jan 2023 3 puts. If you're saying 3, what the heck? These are the pre-split adjusted from the last one. These are VXX1 puts. So, yeah, these are some old paper. Number 2, about 15,000 of the OC40 calls. Number 3, 14,000 of the OC40 puts. Number 4, 13,000 of the OC16 puts. And rounding out the top 5, 13,000 of the OC27 calls. And in terms of action today, what is lighting it up out there in an actually decently active day in here in VXX, the big dog today? Not surprising, again, with all these vol ETPs, like we just said many times, A weekly expiration is where it's at, and that's what all the top 5 positions are today, all expiring today. 3,400 of the 19 half puts is number 1, followed by number 2, 2,700 of the 21 calls. Number 3, 2,600 of the 19 half calls. Number 4, 2,300 of the 20 puts. And rounding out the top 5 on, again, decently active day, all things considered for VXX, 2,200 of the 20 half puts. Mr. Meatball, you're the one who made us start talking about this again. Have you been watching and dipping your toes back into VXX, sir?
Yeah. I've been. It's a good way to play now that it's back to normal. If you want to express a position that mimics a future with 30 days to expire, it's not a bad way to express it. And it with futures in contango, it does have a positive role.
That does help. That's always a problem that bedevils VXX and all products like it. They have that roll yield, and right now with a little bit of juice there, looking a little bit better, at least for VXX right now. Maybe that's also contributing some of the paper we're seeing out there right now. In terms of earnings, Vol listeners, we are on the cusp. We are on the beginning of a brand new cycle. I know Matt and his team are over there. They're re-racking the earnings season reports, getting it ready for you folks. Start crunching the numbers again. In terms of what's left this week, kind of the dregs. I was joking on the option block yesterday that Alcoa used to kick off the season. That's kind of fallen by the wayside now. But you also know you come into the end of the season when Helen of Troy pops up on the radar. And that's what we had this week, listeners. On Wednesday, we had Helen of Troy popping off. We've joked about this one on the option block in the past. So whenever you see that ticker popping up, earnings season is pretty much officially in the books. We do still have some updated earnings move results, and earnings season reports for you. Obviously, the season report is waiting for the new cycle to begin before it has the updated numbers for this cycle. If you want to look ahead a little bit, there are still some names that were just popping off. We had Levi's this week as well as McCormick Spices. So still are a few names popping off. You can find those for yourselves. TheOptionsInsider.com. Click on the Options News and Articles tab to begin your earnings volatility journey. We're still hanging out right now, listeners, at an average of about 85% for the earnings cycle. That means if you take all the straddles and every single underlying moved exactly as much as their straddle was pricing in, that would be 100%. So 85% means overall still some underperformance. But the last couple of cycles have been bangers. So we'll see if we can maybe keep bucking that trend with the newest cycle. In terms of the earnings trades report, no new additions to add right now. Again, kind of keeping the powder dry, waiting for the new season to commence. Still tracking 97 long straddles and 72 long calendars for your earnings trading education and enjoyment. Head on over again, theoptionsinsider.com, to begin your journey to the dark side. As we begin our journey into the volatility voicemail.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you guys send in your questions. We also turn the spotlight back on you folks like we have done again this week. Really quickly, let's pay off last week's poll first. We asked you guys last week, kind of revisiting a poll from June. Back in June, over 40% of you said you were waiting until the S dropped below 37.50 before you started to BTFD. Obviously, we are below that now. When we posted this poll, it was 36.60, and we are pretty much back down in that range right now, a little bit below it. So we asked you, are you buying in here? Are you waiting for lower levels, or did you never get out? And 2/3, 67.2% of you said you're waiting for lower levels. So 37.5 ain't going to cut it for you anymore. You need lower. About 20% said you're back in, and a little over 12% said you never got out. I'm sorry to see that last part there, listeners. Hopefully hasn't been too painful for you out there. But let's get to the question of the week this week, Mark. Our question of the week this week is, again, revisiting a question we asked you earlier this year. We've been tracking all these results to kind of see how your opinion ebbs and flows throughout the year. We asked you back in May a similar question, and 43% of you said that we need VIX to spike over 40 to signal a broad concession in the market. Now it's time for us to revisit that. Quite simply, what level does VIX need to hit to signal the quote-unquote bottom in the market? Gave you three choices and a bit of an other. I gave you VIX north of 40, VIX north of 50, VIX north of 60, or you don't buy into any of this nonsense, and we don't need a VIX spike to signal the bottom in the market. Mr. Meatball, what are your thoughts, and what do you think our audience is voting for, sir?
I'm going to go audience is 40, and I'm telling you, you don't need a VIX spike. You look at what we're seeing today. You don't need a VIX spike to 40 for the market to completely tank. You don't. And you don't need a VIX spike to 40 for the market to find a bottom. We touched 35.84 and the VIX didn't break 35.
Don't need a spike, says Mr. Meatball. And our audience continues to agree with you. We have about 2 hours left in this poll, listener, so get in there at options if you haven't done so already. If you're listening after the fact on the podcast, probably will be too late. That should teach you. Get over there to add options throughout the week. You should be following it anyway, listeners. You put out a lot of great content there throughout the week. That'll also give you a chance to vote in our question of the week. 42.5% right now is saying, yep, no spike necessary in VIX, pun intended. We can see a bottom without VIX even hitting a 40. And then right behind it, 31.3% of you saying a VIX north of 40. That will make you more comfortable buying this market, followed by 15% for north of 60. So I guess they've been looking at our friends buying the 150s this week. They want a VIX north of 60, 15% of you. And then bringing up the rear, 11.3% of you saying a VIX north of 50. That will make you happy. That will certainly make the folks buying those no 50s happy. Of course, obviously they have other things against it that probably will put a sad face on them. But for solely from the VIX options perspective, that'll look pretty nice for them. Again, if you haven't voted, listeners, Add Options is the place to go. And of course, you should be checking it throughout the week. We always have a fun question of the week waiting there for you. All right, I have delayed enough, listeners. It is that time for the most difficult, the most dangerous portion of the show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, buddy, welcome to the crystal ball, the portion of the show where we try to wrestle and see what the vol gods hold in store for us. And we're already seeing some of the vol we had at the start of the show start to mitigate a little bit. We were at almost a 31.5, about a 31.45 in spikes when we kicked off the show. It's at about a 31.18 right now. And VIX cash was at about a 31.90, almost 32. And it's at about a 31.35 right now. Last week, I was at a 29.25. So not terrible, but no joy for me right now. John Smolin from MyAx was at a 28.5. So he was below me. So no joy for him. And then the Meatball doing his weekly bit of palindromic nonsense was at a 33.33. He was looking all right until he wasn't. I think we all had that moment. Maybe not John. I don't think we got quite that low. But we were looking decent out there. Let's look at our, 31.5 for Option God. Oh, let's see. Spikes at 31.18, 31.31. Oh, that's rough, Option God. You were 0.19 away. I feel. Now you feel for us. Now you know how hard this game is, Option God. 32 for Nichols. You were looking good until you weren't as well. Unlimited was literally copying the Meatball. 33.33 for him, so no joy for either of you. Options Queen. You're not bad either. You're about 0.4 away on spikes, but alas, not enough. So again, those are the closest ones. If you guys have sent in your thing, you don't hear your name, it's because those were the closest. So if you get closest, hey, if you get within a tenth of a point, you too can win fabulous prizes. Questions at theoptioninsider.com. Send in your guess after listening to the show, and you too can win fabulous prizes. All right, that means no fabulous prizes for this week. Mr. Meatball, I will be charitable to you, sir. I will allow you to stake your claim early with your palindromic nonsense. What are you feeling for this week?
I'm going to go with the super palindrome again. 33.33. 33.33.
It's got to hit it one of these days, right? It's got to get
it will.
Hey, people are buying 150s. What the hell's 33 in VIX, right? It's nothing.
Right.
It's a rounding error at this point. The 150s are where it is at. And if you're a little bit dubious of those, allow me to present the 140s, also trading for size this week. 33.33 for Mr. Meatball's palindromic. Now, that leaves me a whole bunch of room out there, listeners. I could talk my book, but what fun is that? And so instead, I'm going to say, I'm not going to be a Meatball. I'm not going to go exactly where I was last week because don't think we're going to be. I'm going to say a little bit north of where I am. I'm going to say, actually, I think we might still be north of a 30 handle next week. I'm going to say 30.65. So there you go, listeners. There's our vol market for this week. Pretty wide. You could drive a truck through it. 30.65 on the right side and 33.33 on the wrong side. All right, everybody. That's going to do it for Volatility Views this week. That's also going to conclude your broadcast week for all of you on-demand folks. For all of you pro folks, hangouts. We got a great bit of options oddities coming at you in a little bit here on the network. Of course, if you want to join the pro club, not too late if you want to get in for options oddities today. Got a little bit of time. Head on over to theoptionsinsider.com/pro, or for you really cool kids out there, /secret club. And Mr. Meatball, where should they go if they want to learn more, I should say, about all things VIX, perhaps even get an edge?
Yeah, I'm writing a VIX-centric blog every single day. Go to options.com. You can read about it and learn about all things VIX.
There you go. Optionpit.com. Learn about all things VIX. Another good place to go to learn about all things vol, and particularly spikes. MyAxOptions.com/spikes. They're adding new cool stuff there all the time. If you want to check historical data, you can. But of course, you can also get some pretty cool, pretty powerful, and most importantly, free tools there for you as well. You get Quick Strike now for equities, which is awesome. I still maintain Quick Skew is the best measurement of skew in the business. And now taking that from futures options and applying it to equity options, extremely useful. Gotta love that. And of course, you've got all things Shift Search out there as well, which is always pretty cool. So check out all that good stuff and a whole bunch more. They also have a new Spikes Analytics link over there, which is pretty interesting as well. So a lot of cool stuff. Go down the rabbit hole, myxoptions.com/spikes. That's going to do it for us on our broadcast week. Thanks for joining us, listeners. See you back here on Monday for the option block all the way through to Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MyAx, one of the fastest, most efficient trading platforms in the world. MyAx is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.